Today I'm going to introduce the concept of back testing. Once you have found a set of indicators that you want to see work in action, you will go back in the price action and you will observe them working and try and train yourself to use them in the most probable ways. So I'm going to use my formula here is fair value gap concept, and I'll leave a really good YouTube tutorial in the comment section worth having a look to understand it. RSI and market structure. So you want to use the fair value gap in combination with trend, and you can use the RSI to show a weakening in momentum or convergence, so a strength in momentum. So I don't use anything below a 30-minute for fair value gaps. Anything below a 1 hour. I like to use a 1 hour, 4 hour, and higher. For the RSI, I would use a 30-minute to see the momentum. Let's go back to where this recent uptrend started. So we were consolidating after a massive drop from 126, and it was thought that we were going a lot lower. From a market structure perspective, you can see we have a high taking out the lower high, a higher low, a high, higher low. So this was an uptrend, but this particular point was the first higher low in the uptrend, which is the most riskiest. It's not confirmed uptrend, even though it had a high taking out the lower high. It's not a confirmed uptrend until it has that higher low, and then the next higher high. Okay, so we have the imbalance here. So 3 candles from wick to wick. That imbalance is the fair value gap. Now you set a risk to reward profile. Always set your stop loss before you enter the trade, as you enter the trade. You know what you're willing to lose with the account. This is a game where you want to lose less units of risk and gain more units of profit. And now these units are determined by the amount of your trading account, the size. So in this scenario, you took the risk. Typically, you put the stop loss at the bottom of the box, because typically it just fills the imbalance. As you can see here, the exact middle of the box was filled, and boom, massive. But you could have been conservative. You could have got the 1 unit of risk to 2 units of reward. That's typically the minimum you want to get in that scenario. If you lose 33%, no, if you only win 33% of your trades, you're breaking even if you're getting 1 unit of risk to 2 units of reward. And again, here was a 1 hour fair value gap. Depending on the strength of the trend will depend on whether you can use the 1 hours or the 4 hours. So if you just went, yeah, it's a pretty strong move, we have just confirmed a pretty strong uptrend, we're going to look at a 1 hour fair value gap, and again, you got a pretty good risk to reward there. 1 unit of risk gave 6 units of reward, so $100 gave $600. So we started with no losses of 2 fair value gaps, and we're up about 10 units of reward so far. Typically, once it's filled, that's it. Don't trust the second test, but in this scenario, this was like a double bottom. The imbalance had already been filled. Alright, again, we had a 4 hour fair value gap, and price bounced off it. You could get a 1 to 2. But if you held it for too long and you had your stop loss right below the box, people got taken out there. So you could be more conservative, or you could trail your stop loss, lock in the profits. We hit a point where the trend had gone up for quite some time, and this fair value gap lost. You lost this one. You hit a stop loss here. But you lost 1 unit of risk, and you already gained, what, 3 fair value gaps that gave much more than 1 to 2. So you lost 1 unit of risk, and you had a minimum of 6 units of reward. Alright, so we hit this part. There was another fair value gap. So there's easily another 2 units of reward. So 8 units of reward on the way up, lost 1 unit of risk. Now we had a double top, and that was a bearish sell candle. That was a rejection. Now you've got to be able to flip. Your flip game, your ability to recognize weakness and to flip is critical. If you kept trying to long this, you got wrecked. You might have given back your 8 units of reward. Easy. But if you were able to flip and recognize that double top and it just got weak, boom, massive short, 10 units of reward off that one. Alright, so the trend started to get a bit weird here. Lower high, high, lower low. Then we made a high. There was another fair value gap. Boom, that was a big one as well. Now people say, oh, in hindsight, this is easy to see. But actually, no, if you have a strict formula and you stick to your formula and you play based on units, you don't risk your whole account on one trade. You say, right, I got $1,000. I'm going to risk $50 a trade. In this scenario, you've doubled your account. So you stick to a formula, a set of conditions, a set of indicators, and that's how you do it. It's not, oh, hindsight's easy to see. It's no, you have a formula, you have a strategy, and you stick to it. You don't deviate. So this previous top, 2 touches, became a support. It's another concept you can look at, support and resistance. Now we made a high and then a lower high. A lower high, a lower high. Signaled weakness in a 4-hour candle. Each candle is 4 hours of price action. There was a bearish fair value gap. Could have got a 1 to 2. But this was also a balance point range, which is something you can look into. But that failed as well, but you're already up a lot more units of profit than you are of risk. And that trend there, that market structure, was really funky. That's not a really good uptrend. You want a strong uptrend to be taking risk at these fair value gaps. So once it broke the low, so that was a lower low in this trend. That signaled, things are getting shaky up here. And that signaled a flip, and boom, there's a bearish fair value gap. This was a balance point range, which you can look into. A fair value gap that didn't get filled, but on the other side, a fair value gap. Boom, easy, 1 to 2. This one here was a bear flag, but you could also see a fair value gap. Now, to explain how you could use RSI in conjunction with this formula, you can see that there was a slowing in momentum as price was rising. That shows weakness. So the RSI momentum indicator can also be used as a confluence indicator. So 3 indicators, market structure, fair value gap, and an RSI, can increase probability of your trade getting more than 1 to 1. Price just went hectic down, but even on the way down, fair value gaps kept presenting. Where are we? I seem to have lost the price action. Here we go. Bear with me. Even on the way down, price kept presenting these fair value gaps and giving heaps good risk to rewards. And now we've swept 60 grand. So a lot of people had stop losses below 60, thinking, oh, if it goes below 60, I'll stop. And they just got taken out. They stopped out. It went down to like 60,200. And so now there's a good argument for a recovery rally. All the shorts that are still active from the top, from the dramatic drop, price is likely to go up and just stop them all out. So what I'm looking at now, I'm looking at the market structure on a low time frame to change. And once that changes, we can confirm an uptrend, and bullish fair value gaps will be highly probable. At the moment, it's still shaky at this level. All right, thanks for listening. Make sure you use a stop loss, stay in the game, risk management.